Lecture 5, Bonds Payable and Other Concepts, Part 2. The following are the learning objectives. At the end of these topics, the students should be able to state the initial and subsequent measurement of bonds payable, define the concept of bonds payable as well as its types and features, account for compound financial instruments, know the accounting for the recognition of liabilities, and state the requirements for the offsetting of financial assets and financial liabilities. Effective interest method. So, PFRS 9 requires the discount or premium on bonds payable and bond issue cost na na-discuss na natin in the previous lecture. According to PFRS 9, it shall be amortized using the effective interest method. Actually, ginamit na natin yung effective interest method for the last lecture. However, let us discuss how to use the effective interest method. We have two kinds of interest rate when using the effective interest method. The nominal rate or the coupon rate or the stated rate, and letter B, the effective rate or the yield rate. Note, effective rate versus nominal rate. When bonds are sold at face amount, so therefore effective rate is equal to the nominal rate. When bonds are sold at a premium, effective rate is less than the nominal rate. When bonds are sold at a discount, meaning yung issue price is mababa kaysa dun sa face ng bonds, therefore the effective rate is greater than the nominal rate. Formula for the premium amortization. So, the premium amortization is computed by getting the difference between the nominal interest and the effective interest. Nominal interest, the nominal interest multiplied by the face amount. It is also known as the interest paid, yung kinocompute natin na interest paid. Less the effective interest of equal to the amount of the interest expense that should be recorded during the period. So, effective interest is computed by multiplying the effective interest rate to the carrying amount or present value of the bonds payable. So, note that interest paid is greater than the interest expense under premium amortization. So, ngayon, yung interest paid, yan yung sinasabi nating nominal interest. Yung interest expense, yan yung sinasabing effective interest. So, since mas mataas si interest paid, so nominal interest minus effective interest, yung difference nila equal dun sa premium amortizations. So, therefore, kailangan natin bawasan yung interest expense na na-record natin. Kasi nga, dapat yung interest expense na mag-reflect sa financial statements etong effective interest. E nung nagbayad tayo ng interest, ang journal entry nito, debit interest expense, credit cash. Pag merong premium, mas mataas yung interest paid. So, therefore, kailangan natin bawasan si interest expense. So, pag binawasan natin si interest expense, mababawasan din si premium on bonds payable natin. For discount amortization, kabaliktad na naman. Interest paid is less than the interest expense. Therefore, pag incurred natin ito, nung nagbayad tayo ng interest, nag-debit tayo ng interest expense, nag-credit ng cash. Mas malaki dapat yung interest expense. So, dapat dagdagan natin. So, ibig sabihin, pag dadagdagan, magde-debit tayo ng interest expense kasi nga madadagdagan siya kasi nabawasan yung discount on bonds payable natin. So, mas mataas ngayon si effective interest kaysa kay nominal interest. So, interest paid equals to the nominal interest. Interest expense equal to the effective interest. So, the difference between the two is the discount amortization. Illustration. Effective amortization of discount. On January 1, 2016, an entity issued 2-year 8% bonds with face amount of 1 million for 964,540. So, less than the face amount, therefore, meron tayong discount. A price which yield a 10% effective interest rate. Take note of the interest rate. Meron tayong 8% na nominal, meron tayong 10% na effective. Interest is payable semi-annually, take note, on June 30 and December 31. So, let us prepare table of amortization. So, we have this following date, January 1, 2016. Next, interest period, June 30, 2016, December 31, 2016. 2-year period yung bonds, diba? So, hanggang December 31, 2017. Note, again, how to compute the interest paid or the nominal interest. Face amount multiplied by the nominal rate. Since semi-annual, so 4%. 1 million times 4% or 1 million times 8% times 6/12. So, we have 40,000 every interest date. Magbabayad si company. How to compute the interest expense naman or the effective interest expense? So, how to compute? The carrying amount of 964,540 multiplied by the effective rate. Again, how to compute interest expense? The carrying amount or the present value multiplied by the effective rate. So, since semi-annual again, 5%. So, 964,540 times 5%. Therefore, sa year, for June 30, 2016, meron tayong 48,227. So, ito yung illustration natin. January 1, 2016, meron 964,540. Siyempre, ito yung carrying amount niyan. So, multiply ng 5% kasi semi-annual. So, divided by 2. So, meron tayong 48,227 interest expense for June 30, 2016. Ano nga sabi natin? The difference between the interest paid and the interest expense, yun yung discount amortization. So, ito yung 8,227. Note na, habang ina-amortize natin si discount, tumataas yung carrying amount natin. Bakit tumataas? Siyempre, nababawasan si discount. Si discount kontra account ni liability. So, therefore, nadadagdagan ng 8,227 yung carrying amount natin. So, 964,540 plus 8,227. So, we have 972,767 liability of the company as of June 30, 2016. Continue the process. So, 972,767 multiplied again by 5% kasi semi-annual. So, meron tayong interest expense na 48638, the difference. So, we have discount amortization of 8638. Add. So, we have 981,405 multiply again by the 5% semi-annual effective interest rate. So, we have interest expense of 49,070. So, try to compute using your basic calculator. The difference between the interest paid and the interest expense is 9,070. So, we have the carrying amount as of June 30, 2017 of 990,475. So, yung interest paid, eto talaga to kasi hindi naman nagbabago si face amount. 1 million lang naman kasi lump sum yung payment. And at the end, last interest date, so 994.75, the carrying amount multiplied by the 5% semi-annual. Semi-annual lang, so half lang nito. So, 994.75 times 5%. So, meron tayong interest expense 49525 for December 31, 2017. So, the difference is 9525. Ito yung discount amortization for the period June 30 from June 30 to December 31, 9525. So, i-add. So, at the end of December 2017, yung carrying amount natin equal na kay face value. Bakit equal na? Kasi fully amortized na si discount on bonds payable. Note na pag wala ng premium, wala ng discount, edi face amount is equal to the carrying amount. So ngayon, at the end of December 2017, na-amortize na yung buong discount on bonds payable. So, ngayon, yung carrying amount na ng liability natin is 1 million. Okay, we have the table of amortization na pinrepair na natin kanina. So, note, interest paid is equal to the face amount times periodic nominal rate, kagaya na na-discuss natin kanina. Interest expense is computed as carrying amount multiplied by the periodic effective rate, and the discount amortization is the difference between the interest expense and the interest paid. Carrying amount, face amount minus the discount on bonds payable remaining. So, pwede yung carrying amount na nakikita natin sa table of amortization yung nasa gilid, or pwede din sa presentation kasi ng financial statements, kailangan face amount minus the discount on bonds payable remaining. So, pwede din preceding carrying amount plus the discount amortization. Ito, based to sa amortization table. Magkano carrying amount December 31, 2016? So, ito, nakita natin sa table. The preceding carrying amount plus discount amortization. Ito naman, na pag-compute ng carrying amount, ito talaga yung way of presentation sa financial statement. Face amount na 1 million, minus yung remaining discount on bonds payable during that date. Same lang naman sila ng result. Okay, journal entries natin. So, on the issuance of the bonds, nakatanggap tayo ng 964,540. So, meron tayong bonds payable na 1 million. So, meron tayong discount na i-recognize na 35,640. So, again, pag tinanong on January 1, how much the carrying amount of the bonds payable? The answer should be 964,540. Kasi ang presentation nga sa financial position is face amount minus the discount on bonds payable or plus the premium on bonds payable. So, 1 million minus 35,640, ang magre-reflect na carrying amount ni bonds payable on January 1 is 964,540 equal to the issue price. Then, for the next interest date, we have interest expense 40,000 and credit cash of 40,000. Note na meron tayong discount amortization. Kasi nga, di ba, dapat yung interest expense, nung kinompute natin si interest expense, 48,227 dapat siya kung i-base natin sa amortization table. Eh ngayon, nung nagbayad ka, yung na-record lang natin na interest expense is 40,000. So, therefore, kailangan natin dagdagan ng 8,227. So, to record discount on amortization, nadadagdagan si interest expense, nababawasan si discount on bonds payable. Bakit nadadagdagan si interest expense? Okay, mamaya i-explain natin bakit every time na ina-amortize si discount is nagde-debit tayo ng interest expense. Or, pwede natin i-compound entry itong interest paid saka discount amortization. Pag kinompound entry natin, magre-record tayo ng interest expense na 48,227. Paano to kinompute? Again, carrying amount multiplied by the effective rate. Credit cash of 40,000. Ito yung interest paid. Paano ulit kinompute? Face amount multiplied by the nominal rate. And discount on bonds payable, 8,227. Paano kinompute ang amortization? The difference between the interest expense and the interest paid. Next, December 30, interest date. So, the same. Interest expense, 40,000. Credit cash, 40,000. To record the discount amortization, so, debit interest expense of 8,638. Credit discount on bonds payable of 8,638. The same explanation with the journal entries kanina. So, or we can prepare compound journal entry. We have total interest expense of 48,638. Paano to kinompute? Ito yung base sa amortization table, yung carrying amount multiplied by the effective rate. And since meron lamang tayong cash in total interest paid of 40,000. So therefore, the discount on bonds payable, amortization and discount, we have 8,638. Paano to kinompute? Again, paano i-compute yung discount amortization? The difference between the interest expense or the effective interest and the interest paid or the nominal interest. Okay, let us go to the market price or issue price of bonds payable. So how to compute the market price or issue price of bonds payable? Usually sa problem, binibigay na rin naman, 'di ba? Yung issue price ng bonds payable. Pero paano pag hindi binigay? So, kailangan natin i-compute. So, market price or issue price of bonds payable is equal to the present value of the principal bond liability plus the present value of future interest payments using the effective or market rate of interest. So, lump sum payment, we have present value of 1. For annual installment every end of the period, we have PV of an ordinary annuity, present value of an ordinary annuity of 1 or PVOA. Pag annual installment beginning naman, every beginning of the period siya nagbabayad. So, meaning present value of an advance annuity of 1. Ito yung mga present value factors na kino-compute natin para ma-compute din natin yung issue price of bonds payable. Take note, the computation of PV factor. So, some of you or almost sa inyo is alam na kung paano mag-compute ng present value factor using the basic calculator. So, let I be the periodic effective interest and let N be the number of interest period. So, get your calculator. Enter 1 point effective interest rate. So, if 10%, 1.10. Then, number 2, press the division sign twice. Sa ibang calculator, hindi na to kailangan. Pero sa ibang basic calculator, kailangan to. Press the division sign twice. Sa ibang basic calculator din, once lang. So, itry nyo mag-calculate ng present value factor na given sa libro and then itry nyo i-recompute kung the same ba sa basic calculator results nyo. The number 3, press the equal sign for the number of interest periods required. Press 1 for 1 period, press twice for 2 periods, and so on. So, kung for 2 years yan, so press twice. Or kung 2 years yan, pero semi-annual, then kailangan 4 times natin i-press yung equal sign. 4, the result is the present value of 1. So, yun na yung present value of 1. Again, yung sinabi natin kanina, yung PV of 1, applicable siya pag lump sum payment. Okay, pag isahang bayad, yun yung ginagamit natin. Deduct 1 from the result in number 4. So, yung result in number 4, minus 1 doon, ang labas kasi nun negative. So, alisin mo lang yung negative, kunin natin yung absolute value, and then, divide the result in number 6, yung positive value na, by the interest. So, yung result divided by the interest, for example, 10%, so divided by 10% or 0.10. The next, yung result nun, yun na yung PVOA, present value of an ordinary annuity of 1 at I for N periods. Kung gusto naman natin kunin yung present value of an advance annuity, yung PVOA, i-multiply lang natin sa 1 point I or 1 plus the effective interest rate. For example, nakuha na natin yung result sa number 8. So, the result is the PVOA at 1. So, yung PVOA, pag gusto natin kunin yung PVAA, present value of an advance annuity of 1. So, yung PVOA multiply by 1 point I. For example, kanina natin 10%. So, 1.10. Yun na yung present value of an advance annuity of 1 at I for N periods. Illustration tayo. Mag-compute tayo ngayon ng estimated issue price. ABC Company issued 12% 3-year 1 million bonds dated January 1, 2001. Principal is due at maturity but interest is due annually. The current market rate is 10%. Kung titingnan natin dito, hindi given yung issue price or yung cash proceeds na na-receive ni ABC Company nung in-issue niya si bonds. So, since hindi given, kailangan natin i-compute. Since alam natin na hindi siya equal sa face amount. Bakit? Kasi hindi equal si nominal rate at effective rate. Okay, lump sum si principal kasi due na siya at maturity after 3 years. Pero si interest, due siya annually. So, kailangan i-compute natin ang present value of ordinary annuity. Sa principal naman, kailangan natin i-compute si present value of 1 since lump sum payment siya. So, we have this solution. Issue price of the bonds is equal to the present value of future cash flow. So, ano bang future cash flow natin dito? The principal and the interest. So, for the principal, we have 1 million. Again, PV of 1 pag lump sum payment, isahang bayad. PVOA naman pag installment. So, dito 1 million. PV of 1 multiplied by 0.7135. Okay, try to recompute the present value factor using this information. 10% effective rate, 3-year period, 12% nominal rate. So, at 12% nominal rate pala, hindi natin gagamitin sa pag-compute ng present value factor. So, only use the 10% effective rate and the 3-year period. So, try to compute the present value factor, the PV of 1 and the PVOA of 1 or present value of ordinary annuity of 1 using your basic calculator. So, i-take note nyo to ha. Okay. We have principal of 1 million. And we have also interest of 120,000. Ma'am, saan kinuha nyo yung 120,000 na interest? Interest is due annually. Again, paano i-compute si interest paid? Si interest paid, mako-compute siya face amount multiply by the effective nominal rate rather. So, nominal rate of 12% multiplied by the face amount of 1 million. So, 1 million multiplied by 12%, we have 120,000 interest payment every interest date. So, 1 million times PV of 1. So, try to recompute nyo to ha. I-take note nyo lang yung mga data. Then, 120,000 multiplied by 2.486852. So, we have present value for principal of 751,315 and 298,422 for the interest. So, the total present value of both the principal and interest is 1,049,737. So, therefore, the issue price of the bonds on January 1, 2001 is 1,049,737. Illustration, paano naman pag serial bonds? Eh, yun kasi kanina lump sum, isahang bayad yung principal. Eh, paano kapag yung liability or yung bonds payable is payable every year? Merong principal payment every year. For example, may face amount na 3 million, may nominal interest na 12%, may effective rate na 10%, date of issue January 1, 2020. The bonds mature on every December 31 of each year at the rate of 1 million for 3 years. Therefore, hindi siya lump sum. Every year, binabayaran mo siya ng 1 million yung face amount ng liability natin. So, unlike kanina, yung 3 million babayaran mo after the end of 3 years. Ito naman, yung 3 million babayaran mo every year ng 1 million. So, the interest is payable annually on December 31. Again, paano i-compute si issue price? The present value of future cash flow. So, since iba-iba yung cash flow every year, so therefore, kailangan i-compute natin ang present value of 1. Pag even lang kasi yung cash flows, pwede tayong mag-PVOA. Pero pag uneven yan, bakit naging uneven? Kasi si interest paid po is naka-base sa face amount. Eh yung face amount natin, hindi siya equal for year 1, year 2, year 3. Kasi yung face amount natin na 3 million, nababawasan yan every year. So therefore, nababawasan din yung interest payment natin every year. The present value of 1 at 10% is as follows. So, try nyo to compute etong mga present value factors. 1 period, 0.9091. 2 periods, 0.8264. 3 periods, 0.7513. I will give you time. Try to compute the present value of 1 at 10%. O PV of 1 at 10% using your basic calculator. Okay. So, now, I assume na na-compute nyo na itong 0.9091, 0.8064, and 0.7513. Computation of the present value. Based on our previous information, we have 3 million face amount of the bonds, but that 3 million is payable annually, amounting to 1 million per year. So, therefore, meron tayong principal payment for year 2020 of 1 million, year 2021 of 1 million, and year 2022 of 1 million. Again, paano i-compute si present value or si issue price? The present value daw ng total cash outflow. Year 1, ano ba yung cash outflow natin? Yung principal payment plus the interest payment. So, paano ba kino-compute si interest payment? Face amount multiplied by the nominal rate. So, meron tayong face amount, total face amount ng year 2020. Di ba yung face amount year 2020, 3 million? Before tayo nagbayad ng 1 million sa end of the year, meron tayong 3 million na face amount. Ngayon, yung effective rate natin, kung naalala nyo, given dun sa illustration natin, is 12%. So, 3 million, yung total liability year 1, multiply sa 12%, meron tayong 360,000 na interest expense na kailangan bayaran year 1. So, therefore, yung total payment ni company for year 2020 is 1,360,000. So, therefore, ito yung 1,360 future cash flow ni company from January 1, 2020, 1 year from January 1, 2020, matatanggap. Babayaran to ni company. So, therefore, present value of 1 for 1 period only. So, 1.360000 times 0.9091. So, we have present value 1,236,376. Okay, for year 2 naman, ganito ang ginagawa natin kapag serial bonds. Kasi every year, yung total payment niya is uneven. Pag sinabing uneven, hindi equal. Unequal annual payments. Unlike nung lump sum kasi, equal lang yung interest payment, annual payment. Every year, isa lang yung, the same amount lang yung binabayad na interest. Yun lang din yung binabayad. So, therefore, nagpipivowa tayo doon. Ngayon, yung annual payment, iba-iba. 1,360 sa year 1, 1,240 sa year 2, 120 sa year 3. Bakit 240 lang yung interest payments sa year 2 pala? 240,000 lang. Kasi 'di ba sa year 2, yung face amount ng bonds is 2 million na lang. Kasi yung end ng year 1 is nagbayad na tayo ng 1 million. So, therefore, yung face amount ng bonds sa year 2 is 2 million na lang before siya nagbayad ng end of the year. So, therefore, yung 2 million na yon naka-incur yun ng interest. So, 2 million times 12%, meron tayong 240,000 na interest plus yung annual na 1 million na binabayad natin. So, for year 2, merong total na 1,240,000. The same sa year 3, meron tayong 1 million na principal payment, tapos meron tayong interest payment na 120,000. Paano kinompute si 120? Diba, 3 million yung utang natin, nagbayad na tayo sa year 1 ng 1 million, nagbayad na sa year 2 ng 1 million, so meron na lang remaining face amount ng bonds na 1 million before nagbayad ng 1 million noong December 31, 2023. So therefore, beginning of year 3, yung 1 million, naka-incur yun ng cost na worth 120,000. 1 million multiplied by 12%. So, merong 120,000 na interest payment. So, total payment for year 3 is 1,120,000. Multiply natin sa present value of 1 for 2 periods. Bakit for 2 periods? Kasi from January 1, 2020, yung issuance ng bonds, 2 years mo pa siya before siya magiging outflow ni entity. So, therefore, 1,240,000 times 8264. So, we have 1,024,736. And also, for year 3, we have 1,120,000. Then, 3-year period, kasi from January 1, 2016, 2020, nung time na in-issue si bonds, to December 31, 2022, total years or total period na 3 years. So, therefore, present value of 1 for 3 years. 1,120,000 times 0.713. So, meron tayong 841,456. Yung total present value, ang sabi nga, paano kunin sa issue price? The total present value of future cash flow. Ito yung future cash flow. So, yung fair value nito, yung total fair value niya is 3,102,568. So, ito ngayon yung total present value or total issue price or yung market price ng bonds sa beginning sa issuance, upon issuance noong January 1, 2020, which is hindi siya binigay kanina, so kinompute natin. So, yung issue price niya pala is 3,102,568, more than sa 3 million na face amount, mas greater siya ng 102,568. So, meron tayong premium on bonds payable. Again, nung kanina kasi, though annual yung interest nun, pinivowa natin yung interest. Bakit pivowa yung interest? Kasi nga equal payments lang. Yung binabayaran natin every year is yung interest lang, which is equal lang sila. So, pivowa. Eto kasi, nagbabayad tayo every year. Pero yung every year na binabayad ni company is hindi equal. Kasi year 1, 1,360, year 2, 1,240, year 3, 1,120. So, therefore, kailangan natin i-PV of 1. Para sa year 1, 1,360, 000, i-multiply sa PV of 1 for 1 period. Sa second year naman, PV of 1 for 2 periods, and PV of 1 of 3 periods. So, again, pag unequal payments, usually, yung ginagamit natin is yung present value of 1. Okay? So, ito yung sinabi natin kanina, yung interest payment sa year 1, ito yung 3 million times 12%. Yung sa year 2 naman, yung 2 million times 12% kasi nabayaran na siya nung year 1. Pagka year 3 naman, yung 3 million nabayaran na ng 1 million sa year 1, tsaka 1 million sa year 2. So, therefore, 1 million na lang yung face amount. So, 1 million times 12%, merong 120,000 na interest payment. Table of amortization. So, from kanina, na-compute natin yung 3,102,568. Na-compute din natin to. Ito yung 360,000 sa year 1, 240,000 sa year 2, 120,000 sa year 3. Ito yung interest paid for every year. Again, paano i-compute si interest expense pag effective interest method? Present value or carrying amount multiplied sa effective interest rate. Magkano yung effective interest rate? Given yun kanina. Yung binigay sa information, sa illustration, yung effective interest rate daw is 10%. So, pag gumawa tayo ng amortization table, mag-start tayo January 1, 2020. Upon issuance, we have issue price of 3,102,568 multiplied by 10%. So, we have interest expense of 310,257. Or the difference between the interest paid and the interest expense is the premium amortization. The amortization of premium on bonds payable. So, ngayon, yung 3,102,568, mababawasan niya ng premium amortization. Note na pag ina-amortize natin si premium, nababawasan si carrying amount ni bonds payable. Kasi nga, ina-amortize natin itong 102,568 na sobra dun sa face amount. So, nababawasan to ng 49743 and at the same time, nababawasan sa ng 1 million na principal payment kasi nakabayad tayo ng 1 million. So, therefore, at the end of December 31, 2020, yung carrying amount ng bonds natin is 2,052,825. Next, pagka 2021 naman, meron tayong 240,000 na interest paid. Paano kinompute si interest expense? Yung previous carrying amount multiplied again by the effective interest rate of 10%. So, we have 205,282. The difference between the two is the premium amortization. So, we have 34,718. And dinededuct natin to sa carrying amount, the same with the principal payment of 1 million. So, at the end of year 2, meron tayong 1,018,107. And the same with year 3 again, 120,000 interest paid. Interest expense, paano kinompute? Again, the previous carrying amount multiplied by the effective interest rate of 10%. Bakit may pinagkaiba? Kung may pinagkaiba sa kanila, that is due to rounding off lang ha. Kasi di ba nag-round off tayo ng present value factor kanina. So, therefore, pag pinumultiply mo kasi ito ng 10%, hindi siya equal sa 101,893. Meron difference, pero konting-konti lang. That is due to rounding off para ma-zero lang yung carrying amount at the end of year 3. So, eto, premium amortization, i-deduct natin dito. The difference between the two, i-deduct natin dito. And then, the same with the principal payment, ibawas na. So, at the end of year 3, wala na tayong liability kasi binayaran mo na siya for the last yung year, December 31, 2023, yung 1 million, tsaka yung 360. Kasi nga, at the end of year 3, nabayaran mo na yung buong face amount ng 3 million, 1 million every year, tsaka na-amortize na yung buong premium on bonds payable. Okay? At the end of year 3 kasi, fully amortized na si premium on bonds payable, ibig sabihin, si carrying amount equal na dapat kay face value. Ngayon, binabayaran naman siya every year, kaya at the end of year 3, zero na rin. Wala na tayong liability. Nabayaran na si liability. So, again, any difference is due to rounding up. Okay, so, ito yung pinrepare natin na table of amortization kanina. Now, let's prepare journal entries for year 2020 using this table of amortization. So, issuance of bonds noong January 1, 2020. Siyempre, naka-receive tayo ng cash. Yun yung kinompute natin, yung 3,102,568. So, cash, 3,102,568. Credit, bonds payable of 3 million. Note na si bonds payable, always yan naka-credit at face value. Pero sa presentation niya sa financial statements, lagi siyang naka-net kay discount or kaya naka-add sa kanya si premium on bonds payable. So, since mas mataas si issue price, therefore, meron tayong premium on bonds payable na 102,568. Number 2 naman, next date is December 31, 2020. So, i-record muna natin yung payment of interest na 360,000. So, payment of interest, debit interest expense, 360,000. Credit cash of 360,000. Next, journal entry naman natin yung premium amortization. Again, paano i-compute yung premium amortization? The difference between the interest paid and the interest expense. So, the interest paid is 360. May interest expense naman natin is 310,257. So, yung difference nila is 49,743. Therefore, the normal balance of premium is credit balance, 'di ba? Nag-record tayo nung una ng 100,258. Pag ina-amortize natin 'to, dinedebit natin 'to kasi binabawasan natin siya. And at the same time, binabawasan din natin si interest expense. Kasi kung titingnan nyo sa table, dapat si interest expense 310,257 lang. Kaso, nung nagbayad tayo, nag-debit tayo na 360,000. So, kailangan nating bawasan si interest expense. So, the journal entry, debit, premium on bonds payable, 49,743. Credit, interest expense, 49,743. And for year 1 also, let us prepare the journal entry for the payment of principal. So, madali lang, nagbayad lang tayo. So, ibig sabihin, nabawasan si bonds payable ng 1 million. Nagpalabas tayo ng cash na 1 million. Compound financial instrument. Compound financial instruments is a financial instrument that, from the issuer's perspective, contains both a liability and an equity component. So the common examples of compound financial instrument are as follows: bonds payable issued with share warrants and convertible bonds payable. So, kaya nga compound kasi merong dalawang instrument, the liability and the equity. So, ang sabi, merong bonds payable issued with share warrants and convertible bonds payable. So, let's discuss the two examples of compound financial instrument. Accounting for compound interest. So, paano ngayon pag meron tayong compound financial instrument? Again, pag merong compound financial instrument, yung instrument is merong liability component and equity component. So, ang sabi ng standard, it should be accounted for separately. Ibig sabihin, iba yung amount na naka-allocate kay liability, iba din yung amount na naka-allocate kay equity component. The fair value of the liability component is first determined. Bakit? Naalala niyo yung accounting equation natin? Assets minus liabilities equals equity. So ngayon, kung si bond issuer or yung issuer ng bonds naka-receive ng pera sa pag-issue ng compound financial instrument, therefore, yun yung asset, the cash proceeds from the issuance of compound financial instrument. Less yung liability component nun. Again nga, yung compound financial instrument, merong liability tsaka equity component. So, gamit yung accounting equation, so, una munang i-determine dun sa cash na na-receive natin, magkano dun ang para kay liability. So, less the fair value of that component without the equity feature equals the equity component. So, yung residual, yung natira, yun yung ma-allocate kay equity component. Next, share warrants are granted. Ito yung unang example ng compound financial instrument. The bonds payable with share warrants. So, ano yung share warrants? Share warrants are granted to enable the holders to acquire equity shares at a specified price during a definite period. So, natatanggap to ni holders, ni bond holders, para meron siyang right na, for example, for a definite period, bibigyan sila ng isang buwan, after 1 month, within 1 month, pwede silang makapag-acquire ng ganitong share sa company at 50 pesos per share. Okay, so usually, mas bababa yung price na ino-offer sa kanila. For example, yung market price is 30 pesos. So, sa kanila, binibigay sila ng period kung saan pwede nilang ma-purchase yung ganitong amount ng shares sa halagang 20 pesos lang. So, that is share warrants. So, bonds sold with share warrants. So, therefore, it is an equity component. So, ngayon, pag in-issue yan, meron tayong dalawang instrument, the bonds and the share warrants. Again, anong treatment natin sa compound financial instrument? Okay, the issuer shall classify the liability and equity component separately. Again, the accounting equation, the cash proceeds less the fair value of debt. Unahin natin i-determine yung kay liability. Yung maiwan, yun yung kay equity. Dito, yung liability natin, yung bonds. Yung equity natin, yung share warrants na na-issue sa bondholders. Again, the liability and equity component of the compound financial instrument shall be classified separately and accounted separately. So ngayon, pag nag-issue ng compound financial instrument, si company, kailangan ma-allocate niya yung amount sa dalawa, both sa liability and sa equity component. So, sa first example natin, we have bonds issued with share warrants. So, yung liability component si bonds, si equity component si share warrants. At what amount? Paano natin i-allocate sa kanila yung issue price? So, bonds equal to the market value of the bonds X warrant, meaning ano ba yung value ni bonds kung in-issue siya without the share warrants? Pag hindi yun given sa problem, then compute the present value of the liability. Paano i-compute? The same sa pag-compute ng market price natin kanina. So, we need to use the present value factors. We need to identify the future cash outflow of the company. And the amount that should be allocated to the share warrants is the residual amount. So, the issue price minus the amount na na-allocate sa liability, yung matitira doon, yun yung amount na i-allocate natin kay share warrants. So again, first natin i-determine yung amount na allocated kay liability. Illustration tayo. We have the market value of bonds X warrant given. So pag given na, hindi na tayo mag-compute ng market value. An entity issued 5,000 10-year bonds, face amount 1,000 per bond. So, ibig sabihin, yung bawat bonds is merong 1,000 peso na face amount. 5,000 yung bonds. At 105. So, at 105, na-receive niya yung cash from the bondholder. Again, nag-issue tayo ng 5,000 10-year bonds, face amount 1,000 peso per bond. So, natanggap natin 105 or 105%. So, each bond is accompanied by one warrant. So, magkano lahat ng bonds? Ilan lahat ng bonds? 5,000. Each bond daw is accompanied by one warrant. That permits the bondholder to purchase 20 equity shares par 50 at 55 per share, or a total of 100,000 shares. 5,000 times 20. The market value of the bond X warrant at the time of issuance is 98. So, given. Anong sabi ulit? Yung each bond daw, ilan lahat ng bonds? 5,000. Each bond is accompanied by one warrant. So, therefore, since yung bond natin, yung total bonds natin is 5,000, therefore, yung total warrants din natin is 5,000 kasi each bond is accompanied by one warrant. So, meron tayong 5,000 warrant. Ang sabi, yung one warrant permits the bondholder to purchase 20 equity shares. Pag meron ka isang warrant, makaka-purchase ka ng 20 equity shares. So, kung merong 5,000 warrants, makakapag-purchase yan ng 20 shares per warrant. So, 5,000 times 20 shares per warrant. Total shares na pwedeng ma-purchase is 100,000 total shares. Again, compound financial instrument, including the bonds payable issued with share warrants, shall classify the liability and equity component separately and account the liability component and the equity component separately. So, kailangan merong amount na naka-allocate kay liability, merong amount na naka-allocate kay equity. So, yung issue price natin sa transaction na ito is 5,250,000. Paano kinompute? Di ba meron tayong 5,000 bonds? Yung face amount niya, 1,000 peso. So, 5,000 times 1,000 peso bonds, meron total 5 million. Eh, ang sabi, na-issue daw at 105. So, 5 million times 105, the total issue price or yung total cash na na-receive ni entity sa pag-issue ng compound financial instrument is 5,250,000. Di ba kailangan nating i-allocate sa liability and equity? Anong rule? I-allocate muna sa liability component equal sa value ng bonds. And then, mag-allocate din tayo para sa share warrants. Anong amount? So, sa bonds, the market value of the bonds x warrants. Yun yung rule, di ba? Ano ba yung value ni bonds kung in-issue lang sana siya without the share warrants? Given yun sa problem. Ang sabi, the market value of the bonds x warrant is 98. So, therefore, 5 million yung total face amount of the bonds times 0.98. So, therefore, yung market value ng bonds is 4.9 million. So, anong amount yung ma-allocate sa share warrants? Again, residual amount lang yung sa kanya. Ano yung remaining amount? So, the issue price is 5,250,000. In-allocate natin yung 4.9 million kay bonds. So, therefore, may remaining pa na 350,000. So, yun yung amount na i-allocate natin sa share warrants. Sa computation natin, yung liability component, 4.9 million. 5 million times 0.98. Yung residual amount naman na naka-allocate para sa equity component is 350,000. So, sa liability component natin, 4.9 million, ibig sabihin yan yung naka-assign na issue price sa bonds. Again, the difference between the issue price or the present value of the bonds and the face amount upon the date of issuance is the discount on bonds payable. So, may discount tayo kasi yung issue price ng bonds is less than sa face amount ng bonds. So, yung face amount, 5 million. Yung present value na naka-allocate sa bond is 4.9 million. So, therefore, meron tayong discount on bonds payable na 100,000. So, let us prepare journal entries. Now, to record the issuance of bonds with share warrants, so, ano bang na-receive natin? Yung cash na 5,250,000. And then, let us record the discount on bonds payable, yung 100,000. And then, credit the face value of the bonds payable of 5 million. So, ang presentation na to sa statement of financial position, nakanet siya dun sa discount. So, the bonds payable of 5 million less the discount of 100,000. So, may carrying amount na 4.9 million. So, pag tinanong, on the date of issuance, magkano carrying amount ni bonds? Yung answer nun is the 4.9 million. Pero pag na-record natin siya, si bonds payable always at face amount. And then, credit also the share warrants outstanding. Ito yung equity component, yung 350,000. E-credit natin sa share warrants outstanding. Etong share warrants outstanding, part siya ng share premium. Again, ito yung illustration natin kanina. And then, ang sabi natin nga, based sa illustration natin, each bond, merong 1 warrant. Meron tayong total bond na 5,000. So, therefore, meron tayong 5,000 warrants. Each warrant daw is pwede makapag-purchase ng 20 share. So, the total shares na pwedeng ma-purchase, 5,000 warrants times 20 shares per warrant, total 100,000 shares. So ngayon, let us prepare journal entries assuming the entity exercise 60% of the warrants. So hindi niya in-exercise yung buong 5,000 warrants. Only the 60% of the warrants. So total warrants, 5,000. We have total warrants of 5,000. So, 5,000 warrants times 60%, kasi 60% lang yung in-exercise. Ano ba yung warrants? Granted siya sa bondholders para makapag-purchase sila ng share sa entity. Ano ba yung right nila? Mag-purchase ng share sa entity, one warrant can purchase 20 shares. So, since 5,000 warrants times 60%, 3,000 warrants lang yun na exercise. So, sa 3,000 warrants, per warrant, meron 20 shares. So, total shares na in-acquire is 60,000 shares. So, to record the exercise of 60% of the warrants, syempre an exercise niya, so binayaran niya 60,000 shares at 55. Etong 55 given to sa problem. Ito the bondholder, one warrant that permits the bondholder to purchase 20 equity shares par 50 at 55 per share. So, i-purchase niya at 55 per share. So, malamang magbabayad siya sa entity at 55. So, since 60,000 yung i-purchase, so 60,000 times 55, yung total na natanggap na cash ni entity is 3,300,000. And then, credit also the share warrants outstanding. Di ba meron tayong 350,000 na na-recognize? 60% na exercise na. So, babawasan na natin si share warrants outstanding amount of 210,000. And then, credit share capital. Note na si share capital, always yan at par value. So, since nag-issue tayo ng 60,000 shares, so at par value na 50, so 60,000 times 50, we have 3 million na share capital. Yung excess or yung balancing figure para sa journal entry natin, mahuhulog kay share premium. It is also a part of equity. So, meron tayong share premium na 510,000. Journal entries assuming the remaining warrants expired. 60% na exercise. So, assuming 40% yung remaining warrants nag-expire na nung journal entry natin. Okay, di ba yung total warrants natin is 350,000 yung na-compute natin kanina. 60% already exercise, so meron pang 40% na remaining, so nag-expired na. So, ibig sabihin, mag-debit tayo ng share warrants outstanding, yung natitira dito, di ba? Kinredit natin to nung time na nag-issue tayo nito. Nung time na nag-exercise tayo, dinebit natin to. Pag na-expire na din, hindi pwede na mag-remain siya sa financial statements. Kasi nga, wala nang right si bondholders. Na-expire na yung right, so hindi na siya pwede mag-purchase ng shares sa entity at 55 pesos. So, ngayon, debit the share warrants outstanding, 350,000 times 40% yung remaining, so 140,000. Then, credit to share premium, 140,000. Actually, tinransfer mo lang yung remaining balance sa share premium. Actually, yung share warrants outstanding is part naman din ng share premium. Pero, tinransfer mo lang talaga sa general account ng share premium. Etong entry na to, wala tong effect sa equity. Kasi share warrants outstanding part ng equity, si share premium part ng equity. So, wala siyang effect sa total shareholders equity. Another illustration. Paano naman pag yung market value ng bonds ex warrants is hindi binigay? So, di ba na-discuss natin kanina na pag hindi siya given, i-compute natin. So, kailangan natin gamitin yung formula kanina. Paano mag-compute ng market value? Paano mag-compute ng market value? The market value is equal to the present value of the future cash outflow. So, gagamitin natin yung mga present value factor. So, we have this. An entity issued 5,000 10-year bonds. Face amount, the same kanina, pero ngayon, hindi na given si market value ng bonds ex warrant. So, ngayon, assuming the interest daw is payable annually, mag-proceed tayo sa second paragraph. Assume the interest is payable annually at a nominal rate of 10%. The prevailing market rate of interest for similar bonds without warrants is 12%. So, sa pag-compute ng present value factor, yung ginagamit natin na rate is the effective rate or the prevailing market rate. So, try to compute the present value of 1 and PVOA of 1 using your basic calculator. Given na, itry nyo kung makukuha nyo si 0.322 at saka si 5.65 using your basic calculator. So, the present value of 1 at 12% for 10 period is 0.322. Ginagamit natin yung PV of 1 pag lump sum payment. And then, yung PVOA or ordinary annuity kapag annual installment. And sabi, interest is payable annually, so gagamit tayo ng PVOA. And then, yung bonds daw, yung principal liability, payable daw siya after 10 years. So, therefore, lump sum payment, kaya gagamit tayo ng PV of 1. So, to compute the total present value, sa principal, meron tayong 5 million times 0.322. So, meron tayong 1,610,000. Para naman sa interest payments, since annual, so gagamitin natin si PVOA. So, 10% times 5 million. Kasi paano makuha si interest paid? Nominal rate na 10% multiplied sa face amount. Yung face amount, 5,000 times 1,000. So, 5 million times 10%, 500,000. Na yung binabayaran natin annually times 5.65. So, a total of 2,825,000. So, the total present value or the market value of the bonds ex warrant is 4,435,000. Tandaan, 4,435,000. I-practice nyo yung pag-compute ng present value factor, ha? So, we have a total present value of 4,435,000. So, meron na tayong amount na naka-allocate para sa liability. So, 'di ba? Meron tayong issue price na 5,250,000. Hindi naman 'yun nagbago. In-issue siya at 105. So, 5 million times 105%, 5,250,000. Ngayon, inallocate natin siya sa bonds tsaka sa share warrants. Yung sa bonds, yung kinompute natin kanina, ano yung kinompute natin? 4,435,000, yung computed. Ngayon, pag given yan, edi yung given, pero pag hindi given, compute natin. So, the total present value, 4,435,000. Yung amount naman na naka-allocate kay share warrant should be the residual amount. So, 5,250,000 minus the 4,435,000, the total share warrants is 815,000. We have the liability component of 4,435,000. We also have the equity component of 815,000. So, sa liability component, again, the difference between the face amount and the present value, yun yung discount or premium on bonds payable. And since, syempre, mas mataas si face amount, meaning, binenta natin si bonds at less than the face amount, so nagpa-discount ngayon si issuer. Meaning, merong discount on bonds payable na 565,000. Now, for the journal entries, the same lang sa kanina, pero different amount na. So, naka-receive tayo ng cash worth 5,250,000. Debit also the discount on bonds payable of 565,000. And credit the bonds payable at face amount of 5 million. And credit the share warrants outstanding of 815,000. Convertible bonds are those which give the holders the right to convert their bond holdings into share capital or other securities of the issuing entity within a specified period of time. Another example of compound financial instrument is convertible bonds. From the word convertible, yung bonds mo, pwede mong i-convert. So ngayon, kung ikaw si bondholder, may utang sa'yo si company, pwedeng hindi mo na lang pabayaran kay company yung utang niya, pero pwede mong ipa-convert yung bonds into shares. So, hindi ka na magiging bondholder, pero shareholders ka na ni entity. Pero, pwede lang yun ma-exercise ni bondholder within a specified period of time. Pag hindi niya in-exercise, edi babayaran pa rin siya ni issuer pagdating ng maturity date. Accounting problems arise in two situations, namely, letter A, when the convertible bonds are originally issued, and letter B, when the convertible bonds are converted. So let us discuss the accounting for the convertible bonds. The issuance of convertible bonds shall be accounted for as partly liability and partly equity. Kasi nga, compound financial instrument, dapat mahiwalay si liability tsaka si equity. So again, the same kanina, yung issue price, ma-allocate kay bonds tsaka kay conversion privilege, yung conversion option natin. Yung conversion option ni bondholder. Since nasa point of view tayo, perspective tayo ni bond issuer ngayon. Si bond issuer yung may liability. So kailangan i-allocate sa liability component yung bond tsaka sa equity component yung conversion privilege or conversion option. At what amount? Para sa bonds, market value of the bonds without the conversion privilege. Ano ba yung value dapat ni bonds kung in-issue lang sana siya without the conversion privilege? So, pag hindi given sa problem, again, yung ginawa natin kanina, i-compute natin. Yung conversion privilege naman, yung amount na naka-allocate sa kanya, since equity component siya, yung residual amount, yung matitira. Another illustration, issuance of convertible bonds. So, paano pag in-issue si convertible bonds? So, on January 1, 2001, ABC Company issued 10% 3-year 1 million convertible bonds at face amount. Each 1,000 bond is convertible into 8 shares with a par value of 100 per share. On issuance date, the bonds were selling at 98 without the conversion option. So, given yung market value at 98. ABC incurred 50,000 transaction cost on the issue 1. So, binenta niya at 1 million. Sabi, issued at face amount. So, binenta at 1 million. So, issue price 1 million. Again, paano i-allocate? Kunin muna yung fair value para sa liability. So, yung fair value daw ng liability is 98 or 98% without the conversion option. So, 1 million times 0.98, yung fair value ng liability without the equity component is 980,000. Therefore, yung equity component natin is 20,000. Equity component, the allocated amount para sa equity is 20,000. The transaction cost naman are also allocated to the liability and equity components in proportion to the allocated issue price. Di ba meron tayong additional transaction cost of 50,000? Anong gagawin dito? I-allocate din natin to between the liability and equity component based sa na-issue sa kanila na amount. So, issued price na naka-allocate sa kanila. So, yung allocated amounts from issue price kay debt is 980,000. Given to at 98. And then, yung allocated kay equity component, yung residual is 20,000. So, pag kunin natin yung fraction, 980 divided by 1 million, 20 divided by 1 million. I-allocate natin yung 50,000. So, 980 divided by 1 million times 50,000, 49,000 para kay liability. Para naman kay equity, 20,000 divided by 1 million or 20 divided by 1,000 times 50,000, 1,000 yung naka-allocate para kay equity component.
The carrying amounts of the liability and equity components are as follows. We have the allocation of issue price. 1 million issue price, 980,000 is allocated to the debt component, equity components 20,000. And based on the computation from the previous slide, the allocation of transaction cost, 49,000 for the debt component and 1,000 pesos for the equity components. So the carrying amount ng liability on January 1 upon issuance is 931,000. Bakit dineduct si transaction cost? Transaction cost is deducted from the issue price kasi nga the initial measurement of financial liability including the bonds payable is fair value minus transaction cost. So for our journal entry on January 1, 2001, debit cash of 950,000. The 1 million issue price, yung face amount, minus the 50,000 transaction cost paid by the entity. So the net cash received is 950,000. The discount on bonds payable is 20,000. The difference between the face amount and the allocated issue price to the bonds. The allocated issue price is 980,000 minus the 1 million face amount. So we have 20,000 discount on bonds payable. And we have also bond issue cost of 49,000. And the presentation of bonds payable sa financial statements, etong bond issue cost and discount on bonds payable is contra liability account. So meaning, dinededuct natin siya sa face amount ng bonds. So we have bonds payable of 1 million. So yung presentation niyan, the bonds payable of 1 million, less discount, less bond issue cost. So we have carrying amount sa financial statement of 931,000. And next, we also have credit of share premium conversion feature of 19,000, the net amount allocated for the equity component. Another illustration for the convertible bonds. So, dito, pag nag-issue si company ng convertible bonds and the market value of the bonds without the conversion privilege given, mas madali. The same with the first illustration. Pag given na yung fair value or market value ni liability without the conversion privilege, yun na mismo yung amount na naka-allocate para sa liability. And then the residual, yun yung para sa equity component. However, minsan kasi sa problem, hindi given yung market value of the bonds without the conversion privilege or with yung liability itself lang. So, pag ganito yung problem, mas madali. So, let's start. An entity issued 5,000 5-year bonds, face amount of 1,000 pesos each at 105. The bonds contain a conversion privilege that provides for an exchange of a 1,000 peso bond for 20 equity shares with par value of 50 pesos. It is reliably determined that the bonds would sell only at 98 without the conversion privilege. So, since compound financial instrument siya, convertible bond siya, binenta siya ng entity at 105. Pero kung binenta lang sana talaga yung liability component at 98 lang daw. So, therefore, given yung market value ng bonds without the conversion privilege. Based on our illustration, we have issue price of 5,250,000 pesos. Kasi daw, in-issue yung bonds at 105. So, therefore, 5 million times 105%, 5,250,000. So, we should allocate this issue price to the bonds and to the conversion privilege, to the liability and equity component. So, pag nag-allocate tayo ng amount ng compound financial instrument, ang lagi nating inuuna yung liability component. Then, residual na lang sa equity component. So, for the bonds, since given yung market value ng bonds X or without the conversion privilege, so yun yung gagamitin natin. At what amount of the bonds? So, para sa bonds, the market value of the bonds without the conversion privilege given on the illustration is 98. So, 5 million pesos times 0.98, we have total market value of the bonds without conversion privilege of 4.9 million. So, para naman sa conversion privilege, the residual amount. So, meaning, for the conversion privilege or the equity component, 5,250,000 yung issue price minus the debt component of 4.9 million, the residual amount is 350,000 for the conversion privilege. So, we have liability component market value of 4.9 million equity component of 350,000 pesos. So, for the liability component, kailangan i-compute natin yung discount or premium on bonds payable. So, we have face amount of 5 million. The present value of the liability is 4.9 million. So, therefore, yung issue price 4.9 pero yung face amount 5 million. So, therefore, nagpa-discount si entity ng 100,000. So, we have discount on bonds payable of 100,000 pesos. So, journal entries to record the issuance of convertible bonds, the cash the entity received 5,250,000 pesos, discount on bonds payable 100,000, bonds payable at face amount credit 5 million, share premium conversion privilege credit 350,000 pesos. Another illustration, market value of bonds without conversion privilege not given. Unlike kanina, given yung market value ng bonds without the conversion privilege. So, madali na lang. I-allocate lang natin yung given na market value ng bonds sa debt component and then the residual is sa equity component na. Here, kailangan pa natin i-compute yung market value of the bonds since not given siya. So, the same information, but we have an assumption that the interest is payable semi-annually, hindi given yung market value of bonds without the conversion privilege, but assuming the interest is payable semi-annually at a nominal rate of 8% per annum, the prevailing market rate of interest for similar bonds without warrant is 10% per annum. So, try to compute the present value of 1 and PIVOA of 1 using your basic calculator. Kasi nga, hindi given, so kailangan natin i-compute yung market value or the present value of the bonds without the conversion privilege. Meaning, the present value of the future cash outflows of the bonds. So, yung future cash outflow of the bonds is the principal and the interest payment. So, we need to compute the PV of 1 for the principal and PIVOA of 1 for the interest. So, now get your calculator and try to compute the PV of 1 and PIVOA of 1. Let's check. So, the present value of 1 at 5% for 10 periods is 0.6139. While the present value of an ordinary annuity of 1 at 5% for 10 periods is 7.72. Bakit 10 periods? Kasi nga semi-annual, 5 years. So, therefore, in 1 year, meron tayong dalawang periods. So, therefore, the total periods is 10. And then 5% kasi every period, the periodic effective rate is only 5%. Every semi-annual. So, we have 0.6139 and 7.72. So, now let's compute the present value of principal. 5 million, ito yung principal, multiplied by the present value of 1.6139. So, we have 3,069,500. Then, the present value of interest payment of 200,000. 5 million face amount times 4% kasi per annum to. So, yung per semi-annual, 4%. 5 million times 4%, we have 200,000, then multiplied by 7.72. So, we have 1,544,000 present value of interest payments. So, the total present value or market value of the bonds is 4,613,500. Issue price, 5,250,000. The compound financial instrument is issued at 105. So, therefore, i-allocate natin tong 5,250,000 between the bonds and conversion privilege. So, what amount? Again, i-allocate muna sa liability component. At what amount? At the market value of the bonds without the conversion privilege. So, the market value of the bonds without the conversion privilege as computed, 4,613,500. And for the conversion privilege, again, the amount allocated to the equity component is the residual amount. So therefore, 5,250,000 minus the computation ng market value of the bonds without the conversion privilege kanina of 4,613,500. So 5,250,000 minus 4,613,500, the residual amount is 636,500. So we have liability component again, 4,613,500. Equity component of 636,500. And then, for the liability component, let us compute the premium or discount on bonds payable. So we have face amount of 5 million. We have present value of 4,613,500. So therefore, pa-discount sa entity. Discount on bonds payable of 386,500 pesos. To record the issuance of convertible bonds, the total cash received or the total issue price, 5,250,000 debit. Debit discount on bonds payable, 386,500. And then credit bonds payable at face amount of 5 million and the share premium conversion privilege, 636,500 pesos. We already discussed the accounting procedures upon the issuance of the bonds. Given the two illustrations that we have discussed from the previous slides, yung dalawang case natin is if the market value is given and if the market value of the bonds without the conversion privilege is not given. Now, let's talk about what if na-convert na si bonds. Tapos na tayo sa issuance. Now, the conversion of the bonds payable. So, the accounting procedures. First, amortize discount or issue cost or premium on bonds payable up to date of conversion. Usually kasi ina-amortize natin siya at the end of the period pa. Ngayon, paano pag kinonvert na siya ni bondholder, wala pang end of the reporting period. So, therefore, hindi pa tayo naka-update na amortization. So, pag ngayon, kinonvert yan ni bondholder, kailangan natin i-amortize yung discount or issue cost or premium and bonds payable up to the date of conversion. I-update lang natin yung amortization. Next, number 2, compute for the remaining balance of premium or discount on bonds payable and issue cost balance connected with the number 1. Siyempre, pagkatapos natin i-amortize, ngayon, let's determine the remaining balance or the adjusted balance of premium or discount on bonds payable. Bakit? Kasi pag kinonvert na natin si bonds, yung discount or premium na yan, kailangan din natin i-cancel. Next, number 3. Compute for the accrued interest, if any, up to the date of conversion. For example, every end of the period, nagbabayad ng interest si entity. Ngayon, kinonvert siya, wala pang end of the reporting period. So, therefore, meron ng accrued interest. Meron ng na-incurred si entity. So, kailangan natin i-compute yung accrued interest kasi kailangan yun bayaran ni entity. So, for our illustration, the statement of financial position showed the following balances at year-end. Bonds payable, 12% convertible, 5 million. Premium on bonds payable, 200,000. Share capital, 40 pesos par, 40,000 shares. Authorized and 250,000 shares issued, 10 million. Share premium issuance, 3 million. Share premium conversion privilege, 500,000. On the same date, the bonds are converted into share capital. So, at year-end, given na to, meaning adjusted na to, and then, on the same date, kinonvert niya. So, wala tayong problema dito. The conversion ratio is 20 shares for each 1,000 bond or a total of 100,000 shares. Kasi kung merong 5 million bonds payable, each 1,000 bonds, so meaning merong 5,000 bonds times 20. So, 5,000 times 20, the total shares na pwedeng makuha ni bondholder is 100,000 shares. Cost incurred in connection with the conversion amounts to 100,000. And the accrued interest on the bonds payable on the date on conversion is 150,000, which is paid in cash. So, given lahat. Again, ano yung kailangan gawin? Amortize the discount, premium, or bond issue cost, determine the balance, and then the accrued interest. And given na yung balance ng premium, given na yung accrued interest na 150,000, so therefore wala na tayong problema. So based on that illustration, we have the face value of the bonds payable of 5 million. And the share premium conversion privilege is 500,000. It shall be converted. Again, sa conversion kasi, ito yung compound financial instrument natin. The bonds payable, ito yung bonds payable. Yung 5 million, merong premium na 200,000. Yan yung na-allocate sa bonds payable. And then meron tayong equity component na 500,000. The debt component, the equity component, ito yung compound financial instrument natin, the convertible bonds. And it shall be converted na daw. Iko-convert sa 100,000 shares. So, converted into what? The conversion ratio is 20 shares for each 1,000 bond, or a total of 100,000 shares. So, therefore, converted siya into 100,000 shares. Kasi meron tayong 5,000 total bonds. Kasi 5 million yung face amount ng bonds. So, divide natin sa 1,000 peso bond. So, therefore, meron tayong 5,000 bonds. And each 1,000 peso bond, yung conversion ratio niya is 20 shares. So, times 20 shares, we have 100,000 shares. Pag convert to ni bondholders, okay, mag-i-issue si entity ng 100,000 shares. So, kailangan na to i-cancel kasi i-convert na siya. Hindi naman pwede na na-convert na siya into share capital or equity account ni entity pero hindi pa rin na-cancel yung compound financial instruments sa financial statements. Note, the par value of share capital is 40 pesos given on the illustration. The cost incurred in connection with the conversion amounts to 100,000. The accrued interest on the bonds payable on the date of conversion is 150,000. So, our journal entry to record the conversion, debit bonds payable 5 million. Kailangan na natin to i-cancel. Bakit i-cancel to? I-cancel to kasi nga i-convert na natin. So, bonds payable, debit 5 million. Debit premium on bonds payable 200,000. Debit share premium conversion privilege of 500,000. I-convert into what? Into shares. Okay. So, meron tayong shares at par value daw na 40. So, 100,000 shares times par value of 40, we have share capital of 4 million. So, any excess, yun yung share premium issuance of 1.7 million. So, na-convert na natin si compound financial instrument into shares and to share capital. So, si bondholders ngayon, naging equity holder na or shareholders na ni entity. So, we have share premium issuance of 1.7 million. Number 2, to record payment of accrued interest, interest expense debit of 150,000, and then credit cash of 150,000. Kasi kailangan bayaran na entity yung accrued interest, yung na-incurred niya na. And then number 3, to record the conversion cost given of 100,000. So pag merong conversion cost, i-charge siya directly to equity, the share premium issuance. Again, pag nag-issue kasi ng shares and then merong cost na na-incurred sa pag-issue ng shares, naka-charge yan sa share premium issuance. Di ba kanina sa number 1 journal entry natin, yung share premium issuance is 1.7 million. So i-charge natin yung conversion cost of 100,000 pesos. Retirement of bonds or the convertible bonds. Kasi yung convertible bonds, pag in-issue yan ni bond issuer, now, nasa part ni bondholder kung ipapa-convert niya yan into shares or aantayin niya na mag-mature and then babayaran siya ni bond issuer. Kasi liability yan. Pero meron lang siyang option, meron lang siyang right na ipa-convert yan into shares. Eh ngayon, pag hindi niya pina-convert pero ni-retire niya lang yung bonds, ibig sabihin, babayaran ni bond issuer si bondholders. So, let us discuss the accounting procedures for the retirement of convertible bonds. Retirement of convertible bonds. So, yung retirement price, meaning, yung babayaran natin kay bond holder. Kasi nasa point of view tayo ni bond issuer. So, ngayon, since liability natin yan, hindi niya naman pinakonvert, so liable tayo na bayaran yung utang natin kay bondholders. So, yung retirement price, the same sa issuance, nung time na in-issue, kailangan na-allocate siya between the liability and equity component. So, upon retirement then, the retirement price must be allocated to the bonds and the conversion privilege or the equity component. At what amount? Yung bonds, the market value of the bonds without the conversion privilege, but this time on the date of retirement. Pag hindi given, again, compute the present value of the liability. Pag given, yun na yun. And then, conversion privilege, the equity component, always at residual amount. Illustration, retirement of convertible bonds before maturity. On January 1, 2001, ABC Company issued 3-year 10%, 1 million convertible bonds for 1.1 million. Pwede kasi to na-retire yung convertible bonds before maturity. So, wala pang maturity date, binayaran na ni company si bond holders. So, hindi na i-convert ni bond holders. On January 1, 2001, ABC Company issued 3-year 10%, 1 million convertible bonds for 1,100,000. Principal is due at maturity, but interest is payable every year end. The bonds are convertible into 6,000 ordinary shares with par value of 100. At issuance date, the prevailing market rate of interest for similar debt without conversion feature is 12%. So, hindi given yung market value of the bonds without the conversion privilege at the retirement date. On December 31, 2002, all convertible bonds were retired for 1 million. The prevailing interest rate for similar debt instrument without conversion feature as of December 31, 2002 is 11%. So, upon initial measurement, note, tingnan nyo yung problem. Hindi given yung market value of the bonds without the conversion privilege on the date of issuance and on the date of retirement. Pag hindi given, we need to compute the present value of the liability. So, upon issuance, let us compute the market value of the bonds without the conversion privilege. So, the future cash outflows are the principal and the interest. So, we have the principal, 1 million pesos. And we have the interest. Yung interest daw po is 10% of 1 million. So, 10% of 1 million is 100,000. And since principal to, lump sum payment to, PV of 1 yung gagamitin natin. And since ito, interest payable annually, therefore, PVOA or present value of ordinary annuity of 1. So, Using the 12% effective rate at the date of issuance and using the period of 3 years, let us compute the present value factors. Try to compute the present value factors. If you can compute the present value of 1 and come up with the same present value factors, so the PV of 1.711780, PVOA of 1, 2.040181. So, multiply the 1 million to the present value factor. We have the present value 711,780 for the principal, and for the interest 241,883. So, the total present value or the market value of the bonds without the conversion privilege is 951,963. So the issue price, we have 1.1 million. We have this 1.1 million. And that 1.1 million should be allocated first to the liability. And as based on computation, the liability is 951,963. Therefore, the residual amount, yun na yung equity component, 148,037. So, our journal entry upon issuance on January 1, 2001, debit cash of 1.1 million, the issue price, debit discount on bonds payable, again the discount on bonds payable, the difference between the face value and the present value of the liability. The present value of the liability is 951,963. The face value is 1 million. So, therefore, we have discount on bonds payable of 48,037. Since mas maliit yung issue price ni bonds. So, merong discount. Nagpa-discount si entity. And then, credit bonds payable of 1 million pesos. Then, credit share premium conversion feature of 148,037 or conversion privilege of 148,037. Subsequent measurement. Note, we need to prepare amortization table. On January 1, 2001, yung ina-amortize natin yung liability component. So, the present value of the liability component is 951,963. The interest paid is 10% of 1 million, so 100,000 fixed. The interest expense is 12% of the present value or the carrying amount. So, for year 1, 951,963 times 12%, 114,236. The difference between the two is the discount amortization. So, 951,963 plus 14,236. The bonds payable as of December 31, 2001 is 966,199. And so on and so forth. The same method lang. Multiply yung carrying amount sa 12% and then the difference between the interest paid and the interest expense and the discount amortization. Habang ina-amortize yung discount, nag-i-increase yung carrying amount or present value ng liability. So, to record on December 31, 2001, interest expense cash of 100,000. December 31, 2002, interest expense cash of 100,000. On December 31, 2002, all convertible bonds were retired for 1 million. Ito yung given sa problem. December 31, 2002, ni-retire yung bonds. The prevailing interest rates for similar debt instrument without conversion feature as of December 31, 2002 is 11%. Note, naka-bold, 982,140. That is the carrying amount of the bonds upon the date of retirement, 982,143. We recorded this interest expense cash on December 31, 2001, December 31, 2002. And we also need to record the discount amortization of 14,236 and 59,944. To record this, debit, interest expense, and credit, discount on bonds payable. So this is the result of this entry is an increase to the interest expense that should be recorded by the entity. So again, ito yung interest expense, cash, 100,000. Pero meron pa tayong discount amortization of 14,236. So the total interest expense on December 31 should be 114,236. And also for December 31, 2002, the interest expense should be 159,444. Pero i-focus natin dito upon the date of retirement. So again, upon the date of retirement, we need to allocate the retirement price. The retirement price is 1 million. Na-retired siya for 1 million. So, retirement of convertible bonds, the retirement price of 1 million should be allocated to bonds and conversion privilege. At what amount? Bonds at market value of the bonds without the conversion privilege on the date of retirement. If not given, then compute the present value of the liability. Then, conversion privilege at residual amount. So, retirement before maturity, according to the illustration on December 31, 2002, all convertible bonds were retired for 1 million pesos. The prevailing interest rate for similar debt instrument without conversion feature as of December 31, 2002, meaning at the date of retirement, is 11%. So, ito yung gagamitin natin pag-compute ng present value ng liability at the date of retirement para ma-allocate natin yung retirement price sa bonds. So, 1 million, PV of 1, then PV of 1. Again, ang kinocompute natin, the present value of future cash outflows. So, yung date of retirement natin, December 31, 2002. Kailan ba magmamature yung bonds? On December 31, 2003. Kasi 3 years lang. On December 31, 2003, magmamature ang bonds. So, therefore, on December 31, 2002, yung future cash outflow lang is for 1 year. Ano yung future cash outflow natin on December 31, 2002? Siyempre, on December 31, 2002, ang remaining period na lang 1. So, therefore, yun dapat yung gamitin natin sa pag-compute ng present value factors. And the effective interest rate up on the retirement date is 11%. So, yun dapat yung gamitin natin. So, yung 1 million, marireceive pa rin ni bondholder, babayaran pa rin ni bond issuer. So, PV of 1, 0.900901. So, we have present value of 900,901. Interest naman, the remaining interest or cash outflow from the entity is 1 interest na lang, 1 year interest na lang for the year 2003. So, therefore, PVOA of 1 at 11% for 1 period na lang. So, 0.900901 times 100,000, so we have 90,090. So, the fair value of that instrument without the equity feature, the market value of the bonds without the conversion privilege is 990,991. The residual amount is allocated to the equity component. So, retirement of convertible bonds, again, yung retirement price na 1 million, kailangan i-allocate between the bonds and the conversion privilege. At what amount? Si bonds at 990,991 based sa computation. The market value of the bonds without the conversion privilege on the date of retirement. Pag given, okay. Pag hindi given, edi compute natin. And based sa computation natin, 990,991. Conversion privilege at residual amount. So, 1 million minus 990,991. Conversion privilege, 9,009. So, retirement before maturity, note na nag-prepare tayo kanina ng amortization table. And the carrying amount of the liability is 982,143 on the date of retirement. So, yung 982,143, gagamitin natin sa pag-prepare natin ng journal entry. So, on December 31, 2002, on the date of retirement, note that the face amount of the bonds is 1 million. Kailangan na ito i-cancel. Kasi nga, babayaran na ni entity. So, cancel the 1 million bonds payable. Cancel the discounted bonds payable of 17,857. Paano i-compute sa 17,857? Na discount on bonds payable, the 1 million bonds payable face amount minus 982,143. Yung present value na lang kasi ng liability, 982,143. Then the face amount is 1 million. So, 1 million na face amount minus the carrying amount, ang result niyan yung discount. So, meaning, on December 31, 2002, the remaining discount is 17,857. Note that the normal balance of discount is debit. So ngayon, pag binayaran na natin si bondholders, kailangan na natin i-cancel yung face amount and any remaining balance of discount on bonds payable. Again, pag nag-retire ng convertible bonds, lagi lang tatandaan na kailangan i-amortize natin yung discount or premium. Kailangan natin i-determine yung adjusted balance na discount and premium kasi kailangan natin yun i-cancel. So, 17,857, cancel the discount on bonds payable, and then cash amount allocated to the bonds. Nagbayad tayo na 990,991. Now, etong loss and extinguishments of bonds, workback 8848 or as computed here. Carrying amounts of the bonds, 982,143. Ito yung utang natin. Utang ni bond issuer, 982,143. Pero yung binayad niya, yung issue price ng bonds, based sa computation natin kanina, is 990,991. So, therefore, mas malaki yung binayaran ni bond issuer kaysa dun sa utang niya. So, lugi siya. Again, yung utang niya, 982,143 lang, pero yung binayad niya sa bondholder is 990,991. So, merong loss on extinguishment of bonds of 8848. So, debit loss on extinguishment of bonds, 8848. And note, the total issue price is 1 million. Yung retirement price na naka-allocate kay bonds is 9991. Pero yung retirement price na naka-allocate kay equity component is 9,009. Paano yun i-record? Yung retirement price na naka-allocate kay equity. Simply debit share premium conversion feature 9009. Yung conversion feature natin. And credit cash allocated to equity 9,009. So, eto yung entry na ginawa natin kanina. To record the payment of the bonds and to record the cash payment allocated to equity. So, the total cash paid to the bondholders is 1 million. Allocated to the bonds, 990,991. Allocated to equity, 9009. Or a compound entry of bonds payable debit 1 million, share premium conversion privilege 9,009, loss on extinguishment of bonds 8848, credit discount on bonds payable 17,857, and credit 1 million cash. On December 31, 2002, additional entry, note that upon issuance, nag-credit tayo ng share premium conversion privilege na 148037. Hindi naman pala pinakonvert ni bondholders. So, 148037. So, ngayon, pag binayaran na yan entity, ibig sabihin wala ng conversion feature. So, kailangan ma-close na to. Pero nabawasan tong 148037 ng 9009. Yung cash allocated to equity, yung retirement price na naka-allocate kay equity. So, therefore, yung remaining balance na lang ng conversion privilege or feature is 139028. And yung 139028, kailangan lang natin i-close sa share premium pa din. Note that the share premium conversion feature is part of share premium pa rin. Pero kailangan natin i-close para makita sa financial statement na wala ng conversion privilege yung mga bondholders. Kasi nga, na-retired na yung bonds payable. Tapos nang binayaran ni bond issuer yung liability. So, therefore, close the remaining balance of conversion feature 139028 to the share premium general account. So, to close the remaining balance of share premium from conversion privilege. Again, to close the remaining balance of share premium from conversion privilege, the equity component allocated from the issue price, yung beginning, 148037. Pag kinonvert ni bondholders yung liability, makakancel lang yung 148037. Pero pag hindi niya kinonvert, mare-retire lang si bonds. So, therefore, i-close lang din natin si equity component na 148037. However, net na ng allocated retirement price. So, here, the allocated retirement price for the equity component is 9,009. So, the amount permanently close to share premium account is 139028. The equity component is close to the share premium general account because the conversion feature is forfeited by the retirement of bonds. Wala ng conversion feature. Hindi na mako-convert yung bonds kasi nga, pinabayaran na sa entity. ni-retire na yung bonds. The equity component remains an equity whether the conversion feature is exercised or not. Kasi nga, pag na-exercise yung conversion feature, matatransfer lang din naman siya sa share premium issuance. Pero pag hindi siya na-exercise, i-close pa rin siya and then itatransfer lang siya sa share premium general account. So, nasa equity account pa rin siya. Retirement of convertible bonds at maturity. The previous illustration shows the accounting treatment upon retirement of convertible bonds before maturity or the premature retirement of convertible bonds. So, we have illustration for the retirement of convertible bonds at maturity. On December 31, 2020, the statement of financial position showed the following balances. The bonds are convertible and originally issued on January 1, 2010. So, on December 31, 2020, ito na yung balances. On January 1, 2010, the stated interest rate is 10%, payable annually. Nung original issuance, noong January 1, 2010, the original issue price is 6 million. And that original issue price dapat na-allocate sa equity and liability. And then, in-allocate siya sa liability. Upon issuance, ang issue price daw ng liability is 5.6 million. Given niya yan. And the share premium, the residual, is 400,000 for the equity component. So, the issue price now, the 5.6 million, the difference between the issue price allocated to the debt component and face amount of 5 million is the premium on bonds payable. Since mas mataas yung issue price. So, we have 600,000 premium. Now, on December 31, 2020, i-retire na yun. So, journal entries to record the payment on December 31, 2016, babayaran ni si bonds payable. So, bonds payable 5 million. Kasi nga, diba, in-issue siya January 1, 2010. Mature siya December 31, 2020. So, kailangan na siyang bayaran. So, bonds payable 5 million, debit. Then, interest expense of 500,000. Note that we have nominal interest rate of 10% and yung interest binabayaran annually. So, 10% times 5 million, 500,000 interest for year 2020. Then, credit cash of 5,500,000. Next journal entry, close the share premium from conversion privilege. Note that at the date of issuance, meron tayong conversion privilege na 400,000 pesos. And then we have share premium issuance na 400,000 pesos. Kinlose lang natin sa share premium issuance. Wala naman talaga siyang effect sa total shareholders' equity. Kasi both the share premium conversion option and the share premium issuance is part of the equity. So, kailangan lang i-close siya. Kasi nga, na-forfeit na ni bondholders yung conversion option or conversion feature nung nag-retire yung bonds. Okay. So, dito, wala tayong allocation ng retirement price. Kasi nga, niretire yung bonds at maturity. Meaning, kung ano yung liability, yun lang talaga yung babayaran. So, yung binayaran lang ni entity is the 5 million principal and the interest expense na na-incurred for that year. So, 5.5 million. Pero pag meron kasing retirement before maturity, usually, hindi siya equal dun sa face amount. Hindi siya equal dun sa liability, yung retirement price. Kaya meron tayong allocation ng retirement price. Pag yung convertible bonds, niretire siya at maturity, mas simple yung procedure, mas simple yung journal entry. And yes, it's the end of Lecture 5. Thank you. If you have any questions or you need any clarifications regarding the Lecture 5 topics, please post or leave your messages or questions in the discussion section of our Schoology course. Thank you.